Hello, everybody. Welcome back to the Road to Retirement. Tony Marlette Jr. at Brookside Tax and Financial Group, riding solo today. No Tony, no Chris, no Zach, just me. So either I'm going to get tired of hearing my own voice, or you're going to get tired of hearing my voice. So, uh, what I'll get into today is kind of ideal for a one-person show, anyway, and it's something that's very relevant to us, certainly in the coming days and weeks, which is a tax preparation checklist. So, obviously, as a lot of you know, we are a tax firm first. So, yes, we do financial planning, which is what I do. Yes, we do insurance, which is what a couple of our advisors do. Yes, we do legal, which we also have a couple of in house attorneys for, as well as a big support staff for everything. Yes, we do all those things, but we specialize, or we got our start by doing individual tax returns. So tax returns for people with W-2s, 1099s, Social Security, and all these other things. So we are going to bring on number 4. Good morning.
Good morning. Can you hear me okay?
I can hear you. Can you hear me?
Yeah, have you been where are we at in the
We are
show? You're
literally
talking
1
to our
minute in.
listeners out there. I thought I'd quick join in.
That's all right.
Um
We are 1 minute in, and I just got done talking about how this was going to be so great as a one-man show. So
Oh, I can duck
no, no,
back
no,
out.
no. I want that. It's always better with you here.
All right. Well, what are we talking about today, Tony?
So I just gave our intro topic, which was going to be a tax prep checklist for this year. So
Oh,
we're going to
didn't know
be,
there was one. This is good for me. I need a tax prep checklist.
yeah,
This is where I'm always frantically running around like, "Oh my goodness, what do I need? What do I need to think about before I get my taxes done?"
yeah. You're the guy that submits 3 amendments every year, right?
No, no, I don't do that. No, I
Kidding.
have no,
I'm
no.
kidding.
That's why we have Brookside Tax.
Yeah,
So
that's
we
exactly
don't.
right. So I had just started talking about how, yes, we have advisors that do financial planning, we have lawyers that do estate planning, and we have a big support staff that supports all those different things. But we started off as a tax firm. And a big part of that is doing individual tax returns for people with W-2s, 1099s, Social Security. Those are some of the basics.
Yep.
Uh, but really, to whether even I would say this applies if you're doing your own taxes. You don't want to keep going back and forth, stopping, picking up. You want to have everything ready. And honestly, I believe, a lot of tax returns, whether you're having somebody do them for you or not, are going to go a lot more smooth if you have everything ready. And I
Well,
think too, when
sure.
when
Yeah.
people come to us, you've taken the time to make the appointment. I know it really is a detriment if we have to wait for forms, have somebody come back, make another appointment, drop it off. Honestly, there's a lot of things that can fall through the cracks. So if we're professionals and that happens, I can only imagine what happens if somebody's trying to do it on their own.
Oh, yeah. I mean, that's crazy. I know, if you're single and young and it's really simple and you're good, that's fine. But the minute you have a family or, you have a full-time job, you have investments, you have a family, you have kids, you need to work with a tax professional. There's no DIYing this, in my
Sure.
opinion. I think it's a big mistake. And I see people that I've known that, oh, I do my own taxes, and I'm like, and they've made huge costly mistakes.
Oh yeah, I can't. I have. There's several that come to my mind. People
People
that
have
we've
come in, I bet, and they've
absolutely
they've like, did I do this right? And you're like, wow.
right. That's right. Um, so a couple of things that I think are amongst the basics. By the way, I meant to tell you, you'd have been so proud of me today. I got all the audio and video
I
hooked
see
up
that.
on the
Yeah.
first try.
It
I'm
looks and
learning.
sounds great, Tony.
I'm
Yeah.
learning, Tony Shore. I am learning.
Yeah, yeah, the audio sounds great, you look professional there, you've got the mic right there, the headphones, you sound good, I am very proud, Tony.
All right,
It's
good.
only taken how long have you been doing the show with me?
Oh, we're going on 4 years.
4th year's the charm, as they
That's right.
say. I mean,
That's
that's the
right.
saying, that's how it
That
goes,
is. Yeah,
right?
I've heard
Yeah.
that one
Yeah.
before.
Yeah.
If we haven't, we have now. But some of the basics of what anybody should bring into a tax appointment, I think it goes without saying, but we'll mention it anyway. Your W-2, if you have one, if you're working, is the most important thing. It's got your income and your tax withholding on there. That's obviously very important. Tax withholding on a W-2 or a 1099 or even a Social Security 1099 is going to tell us and tell the government how much they have already of their tax bill. It's also going to, talk about the income that you've taken. If it's W-2, it's earned income. If it's 1099, you've taken it from a retirement account that also counts as income for tax purposes. And then, of course, those of you on Social Security, if you're not working, you don't have a W-2, but you have your Social Security 1099 form, which is going to have your income, any taxes withheld, if applicable, and also what you've paid into Medicare Part B.
Ah, okay.
So
S
those are fairly basic.
Yep. Yep, that makes sense, and so it's good to make sure you're aware of all these things, especially if you're doing your own taxes, but it's good to have an awareness even if you say, "Well, I got a great CPA, takes care of everything," or "I work with Brookside Tax." You need to have for those that are listening, we have a lot of listeners and viewers who are clients of yours or of Brookside Tax, have worked with Chris for years, and, this is helpful for them because it's good to be aware of what you need and why.
For sure.
Yeah.
Yeah, and you mentioned, having a good CPA. I think having a good advisor or a good a tax preparer, part of that is on the client to keep them prepared and to keep them abreast of any changes in situation and things like that. I think that definitely adds to it. Some other things that are maybe are not so common that people may not think of when they come in for their tax appointment. A big one is what's known as a Form 8949, which has your gains and losses from taxable investment accounts in there. So this is not a 1099. A 1099 is income from a 401k or an IRA, which is pre-tax money, whereas the 8949 or the gain loss form is gains and losses from a taxable account. You do not need a form like this from a 401k or an IRA. You only need it for what we call a non-qualified account, meaning it's not qualified for special tax treatment. So you have to pay the gain taxes on the gains every year whenever you realize them.
That's interesting. Yeah, and, my dad has a CD, right? A certificate of deposit at his bank,
Hmm.
and it's a 17-month CD, and it earns, I don't know, 4% interest. Um, and then he got a tax form yesterday, actually, in the mail, and I get his mail
Hmm.
because I have to help him with his finances. He's 81 and has some cognitive issues. And it said, you earned 700 and some dollars on this money this past year or whatever it was, the amount. And here's the tax form. And I'm like, oh, we have to pay taxes every year on the earnings and a certificate of deposit, I guess.
Yeah, yeah, you do. And we've seen a lot of those over the last few years. That's actually on an interest form, a 1099, what they call a 1099 INT or interest
Yes.
form. But yes, you're correct. So CDs, whenever they get credited, whether you've taken the money and put it in your pocket or not, when that CD gets credited with interest, even if you keep rolling it year after year after year,
Right.
you still pay taxes on that money as if you've received it. So that's a little different. So people think annuity and CD or fixed annuity and CD are the same. I think that's the biggest difference between the two. The annuity is tax deferred, meaning it qualifies for that special tax treatment we were talking about before. But in a CD, every time you get a
Every
penny
year,
of
any
interest. That's
interest
correct.
earned
Anytime
counts
any
toward your
interest.
income,
Exactly, and we see a lot of those. We've seen a lot of them in the
even though it
last few
doesn't hit
years.
your bank account as income. It
That's
counts
exactly
as
right.
income for that calendar year, whatever you've earned that year. Even if you have a 3-year CD, each of those 3 years, you're gonna have to pay, interest or
Absolutely.
taxes on the
Taxes on
interest.
the interest. Yeah. And
Ah,
and we to your point, and that's a good example with your dad. We've seen a lot of these over the last few years because interest rates have increased. They're not
sure,
anymore, but they have in years past where CDs were more attractive and they still are to some degree. Those interest rates, though, they come with the caveat that they're taxable in the year in
sure.
which you receive it.
Yeah, and the interest rates aren't as great anymore. I
Right.
mean, like what they do is we said we don't want it to automatically roll, but it's set to automatically roll. You have to go in there on the day or within 10 days of it expiring, and only then can we get the money out. We have to sign. He has to sign a paper, and so I was a little frustrated with that aspect of a CD too because they roll it over, but then the new CD, it's like a 17-month CD right now at that bank is paying nothing. Like,
Right.
I mean, maybe 1.5, 2%. But to get up to 3 or 4, you have to do like 7 months is all,
Right.
and then it renews, and then it's going to be lower. So, yeah, CDs for a while were great because they were paying, I mean, 5% on a CD is,
Sure.
for 18 months is great, or 24 months is great.
Yeah.
But now you
Yeah.
have to get it for such a short term if you wanna get a high interest rate. You're only gonna get that high interest for a few months, and then
Right. And remember that interest rate is annualized. So if it's a 3-month CD for 5%, you're not getting 5% after 3 months. You're getting 5% divided by four since it's only for 3 months. So it's annualized 5%. But
yes.
that's a good point. I've seen people, I think a good thing for people that have a lot of CDs and you're looking at paying a lot of taxes on the interest. We have seen people where that takes them from refund territory into owing because they're not accounting for that. And
Yeah,
that's okay as
terrible.
long as they're aware of it.
Yeah.
But I think for those folks, sometimes the tax deferral option works really well too because you can have a little bit of the CD interest taxable and then put a little bit of it into something that's tax deferred, still getting the fixed interest rate, not taking on any risk, still having that couple of year time frame, but the interest that you earn on the tax deferred vehicle you pay later. So in that sense, say if you have a CD or let's just say a fixed annuity, you'd pay some of it now and some of it later. So
Right.
variety is the spice of life, as they say.
Right, right. That is interesting, and a lot of people aren't thinking about, okay, what did I earn in interest in investments, and is that will that affect my taxes this year?
Right. Yeah, yes, it does, and we've seen it. It may not have a huge detrimental aspect, but or effect, but it still does. I think another big thing, if you're self-employed or if you have a rental property that's a Schedule C or a Schedule E, you want to have expenses that go with it, whether it's mileage, if you have a rental property, any maintenance that you've done to the property, that's all going to count against the income and obviously, you don't get a rental property or you don't become self employed to not make any money. You want to make money, but you want to make sure that everything that you put into it that's able to be deducted off the income for tax purposes, you're taking advantage of.
Right. Like if you use wear and tear on your vehicle, like if you're self-employed, where's your office? What are you paying for rent on the office? Do you use your vehicle for work?
Absolutely.
Are you calculating mileage to deduct from your taxes?
Sure.
And you should work with tax professionals like Brookside Tax. And the beauty of Brookside Tax, I want to make sure our listeners understand how important it is to work with a financial services professional, a financial advisor, some financial planners, uh, alongside tax professionals. And usually it's two separate entities, but you need somebody who has the big picture and your long-term picture, because most CPAs, you take it to a tax preparer and they're just preparing your taxes looking back at the last year. maybe they might look ahead to the next year, but they're not looking at your overall retirement plan, right? And so that's another thing to be prepared for taxes. But the beauty of Brookside, which most people don't have, is you've got tax CPAs and financial advisors, sometimes both in the same person. I'm not going to name
Yeah.
names, Chris Anselmo, but they're there, right?
That's right. That's the old Chris Anselmo, not Chris Anselmo, right? Um,
Right. We're all Chris Anselmo.
yeah, no, you're correct, and we have a lot of clients. I certainly have a lot of financial clients in my book of business that started off as tax clients, and we
Sure.
get to talking. We look at their statements, and I think that's a big value add for us. Um, don't forget too, when you're coming in, we're already talking about the financials. We're already talking about, if you took 30,000 in withdrawals from your Edward Jones IRA, I'm going to ask you, and my colleagues probably are too, um, you know, who are you working with on that? What's it been like? Are you experiencing volatility? Are you prepared for it? Things like that, just to start the conversation to A, see if people are prepared, and B, to see if there's anything that we can help with. So, that's why I say we're already on the financial part of this. We have all your basically a financial snapshot of your year right in front of us. We're going to ask those questions just to make sure that we're doing everything that we can for you.
Right.
Another big thing to bring on your tax appointment, any medical expenses. Now, medical expenses are not what they used to be because the standard deduction is so high. And in order to take advantage of the medical expense write off, you have to be above a certain percentage of your adjusted gross income.
Hmm.
If you have excessive medical bills and lower income, this is kind of the niche here is bring those expenses in. We'll put them on the Schedule A, which is an itemization schedule. And if you're above the standard deduction and you're above that 7.5% of your adjusted gross income, you get that amount. Uh, you get a tax break for it. It's not uncommon with seniors that's the case. If you're in your working years, your mid 40s, and you went to the doctor a few times and you had a couple of copays, it may not apply to you. But if you're on a fixed income and you have excessive medical bills, at least if they start above what the standard deduction is, which is around 14,000 if you're single, uh, be sure to have those. And then this way we can input that.
Yeah. That makes sense. And you're right. Another aspect of this being prepared for taxes is understanding the standard deduction and why you don't itemize any, or why most people don't itemize anymore. I mean,
Right.
my wife and I used to itemize and get a lot of deductions, and then the standard deduction rose and everybody uses that. And so we haven't itemized since. But
Right. Yeah.
sometimes I wonder, I'm like, wow, we used to get a lot of, because we have side hustles, and I have my own voiceover company, and so used to get some write-offs there, right? And
Yeah. And you
kids
can
in
use
school
those.
just, yeah, various things.
Right. You can still use those, assuming you do a Schedule C for self employment. You can still use some of those expenses, but just you can use it to net out really all of your income. It's not just your Schedule C income, but assuming you fill that out, then yes. Bank info is a big thing too. If you're getting a direct deposit or you're going to owe money and you don't want to deal with checks to the IRS and everything, bring your bank info. Just bring a voided check, account number, routing number. We can put it in our system. We have it on file forever, and you only have to bring it once. So it's still surprising to me how many people who are getting refunds don't want to give their bank account info and would rather get a check. I don't understand that. I can
No, it's
understand if you owe money and you want to mail a check and not have it deducted. I can sort of understand that a lot more than I can. I don't want to put my bank info in, just have the IRS send me a check.
yeah, I was very upset one year when we used a tax preparer and they had our tax information, or our bank account information from the previous years, but for some reason they didn't put it in or something that year, so we got mailed checks, and that's the year checks were really late, and everybody we knew with direct deposit had theirs, and we're like, is our check lost in the mail? It's just there's no reason, especially if you're going to get a check, but even to pay, just know that it's going to be taken care of. It's a no-brainer, and work with a firm like Brookside Tax, where they're going to get your bank account information once. It's going to be secure. They're going to give it to the IRS, and the IRS will pay directly deposit into that account. You'll get your funds sooner, and you won't have to worry about it getting lost or stolen. I
Yep.
mean, for those two reasons alone, it is just it's what I call a no-brainer.
Yeah. Yeah, I would tend to agree. And then one thing we've been seeing a lot of in the last few years is a form known as a 1099K. This is for payments that you've either received or sent, or it would be more received, from an electronic like a Venmo or a PayPal, or if you have rental property, maybe you use Zillow for that, or Redfin or Realtor, whatever it may be, receiving income if you set up direct deposit for professional services through, say, a Venmo or a PayPal, one of those services, you're going to get a 1099K if you have over $600 in income from those sources, and it has to be acknowledged and you have to pay taxes on it. So this is something within the last few years. I think we get more and more of these every year. The 1099K, which is for those electronic payments over a certain amount that you've done for professional services. You don't need a 1099K if Tony is going to Venmo me $250 for being the greatest co-host ever. You're going to send me money for that. That's my personal money. I'm not providing a professional service, although I
Oh,
kind
but
of
you are, Tony. You are. You're a total professional, and you provide great service to everyone and all of our listeners.
Well, I appreciate that. So those are some of the basics. Do you think? What do you think? Is there anything that we didn't talk about on here that is fairly common?
Well, I know that with three kids in college, sometimes when Sarah and I help our kids out with books or something that might not be covered through other means, we always itemize those, and we always list those and give them to our tax preparer. I mean, sometimes it depends. I know that, when you have a family, you really want to talk to your tax professional about what type of deductions you might be eligible for, or tax credits, and
Perfect.
make sure that you're getting those tax credits that you're owed, and filling out the right forms for those, like electric cars or kids. I mean, and a lot of that I know is automatic, and you guys always look for that anyway. But sometimes there are things that, wow, okay, you paid for this, or you have a home business and bought a new computer last year. Let's see what that would be as far as a deduction, maybe, or a write off.
Absolutely. Yeah. If you've made payments for a child to a college or an educational institution, those all count too. Like you said, with books, bring that stuff. You get an official form for it. You can track it on your own, but you get an official form for it. You get a 1099 for that too. And bring that into your tax appointment because you can always get credits for those. If you're
Yes.
going to school and you haven't graduated yet, you get a big credit for that. Even if you're past the 4 years, you get what's known as a lifetime learner's credit, where it's not as great as, say, your first 4 years in a educational institution, but you get lifetime learners credit if you are, say, a professional student, or you're going back and maybe getting a master's. You can take advantage of those things on there too. So
Yeah.
that's a big one. You're right.
Yeah. That's huge. Well, a great checklist today, and I'm glad I could jump on and join you today. That was great, Tony, and a great topic. Now's the time. But if our listeners out there have questions about their taxes
Mhm.
or their situation, how can they get a hold of you? What should they do?
You can call us 440-886-3550. Visit us online, brooksidetax.com. Stop into our office. We do get a fair amount of foot traffic, although with as cold as it's been, we're not getting any, certainly understandable. Uh, YouTube channel gives plenty of little snippets of advice at Brookside Financial. And our Facebook page, you can reach out to us there as well at Brookside Financial. So really no shortage of ways to reach us.
That's excellent. Well, Tony, great show today. A timely topic. That's awesome. Listeners and viewers, that does it for today's episode of The Road to Retirement with our host, Tony Marlette Jr.
Thanks, everyone. Thanks, Tony. Have a good week.
Yep.